CEO Steve Ballmer says this earnings report will not affect his company's bid for Yahoo, but could it influence shareholders' decision-making?
Let's ask our Fox panel, including Peter Schiff, author of Crash Proof. We have Jordan Netburn from Axiom Capital Management, Yoron Brook from the Ayn Rand Institute, and Victoria Barrett from Forbes. Victoria, you're out there in California land near Silicon Valley. I'm dying to know if you believe this earnings number, no matter what it is, because obviously Yahoo is throwing everything it's got at this to make sure it beats.
Oh, yeah, that's why you can't look at this number and really say, hey, is this going to happen next quarter or the quarter after that? And if you're a Yahoo shareholder, Microsoft is offering you a really nice premium. Yahoo's current stock price is really in big part thanks to Microsoft. A lot of shareholders are betting that they're going to get $31 a share at least. So, you know what? I see this afternoon as only downside for Yahoo. You know, if they miss their toast, if they beat, you've still got Steve Ballmer saying we're not going to pay more. And they don't have a second strategy. There's no, like, big vision here where Jerry Yang is saying, you know, this is the next direction.
Jordan, expectations, though, are so high because of everything that Liz was saying and Sandra was saying about how you can work the numbers to make it seem as bright as possible, even on a cloudy day. So are expectations so high that unless they beat the numbers by a lot, will the market be disappointed?
I think there's certainly room for disappointment if they don't hit the number, but I think the bigger picture is this deal is just not what we saw 7 years ago in this internet sector. These companies are no longer the bastions of growth they used to be. I think Yahoo...
Even in light of Google's great numbers?
I think Google is the growth name in that sector, and I think that's why Google's had such a meteoric rise. But Yahoo and Microsoft, these are no longer the growth companies they were, and I think Microsoft is giving them a very fair outlook, and I think they're not stupid guys. I mean, Bill Gates is a guy, Ballmer's a guy. These are guys that do their due diligence, and so maybe there's a little bit left if some miraculous surprise comes out of the woodwork. But this is making the XM Sirius satellite deal look like an exciting deal.
Peter, the deal deadline is Friday. If Yahoo turns it down, then Microsoft can go hostile, and they can take it to a proxy battle, which would be very ugly and difficult, and they could even lower their bid, could they not?
I think they'd be foolish to turn it down. You know, it's a good bid. Microsoft's at about 15 or 16 times earnings. Yahoo's at 60 times earnings. You know, it's twice the multiple of Google. Why should Yahoo be valued twice Google? It's a great deal. They should take the money and run. I know they're getting some cash and some stock. And when they get that cash, they should get it out of the dollar as quickly as they can.
Well, and Yoron, actually, Peter's onto something, which is the fact that originally when this offer was made, it was a couple of $1 billion more than it's worth now because Microsoft's share value has come down.
Well, absolutely. I agree with Peter. Yahoo should take this deal. And I don't think expectations are that high. If expectations were high, the stock wouldn't be at 28, it would be at 32. I mean, the expectation would be that Microsoft ups the bid. Microsoft's not going to up the bid, and Yahoo shareholders are going to want this deal. Whether Yahoo management wants the deal or not, that's a different question.
Sandra, Jerry Yang is dying to keep this company either independent or get a higher deal. Is he the CEO to lead them into the future?
Well, that's the big question, is because ever since this offer was put on the table, he's tried everything in sight to try to please the investors, please shareholders out there, and he's pretty much failed at that, to be quite honest with you. And basically it all goes back to, you know, what else can people look for in this report today? One thing that a lot of investors have been, or analysts have been talking about is their international sales. If they're able to prove that they've been pretty impressive as far as international ad revenues coming from Asia, that could be a big one for investors to look at today. The other one is just overall market share. The latest numbers here, Google 60%, Yahoo 20%, Microsoft 9% of the share of the market right now. So it's all about getting the ad revenue space out there, and that's going to be a huge one to see if they picked up any more from Google.
Victoria, we only have a couple of seconds, but quickly, the consensus in Silicon Valley, is the consensus that this is a deal that Yahoo can't afford to pass up?
Yeah, the consensus is that this deal is done. I mean, Yahoo's problem and Jerry Yang's problem is that he came in a year ago. All he's done on the surface seems it's like layoffs. So that's just been his big value add for a year. There's no plan B. So Microsoft has got to be the next move.
Final word for this panel, but we got a lot more to talk about on Yahoo. It's just about 40.